Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency market update for Wednesday, September the 16th. So it's been a couple of days since I did any videos, and I've been heads down working on programming on one side, and on the other side, I've been really crazy busy the last 24 hours, especially testing some new strategies. Had a lot of fun with that stuff. So I want to talk about the market. I want to talk about, we're going to talk about cryptocurrency, but full disclosure, haven't really looked at the charts much today for Bitcoin. So I'm going to do that on the fly again, like I did in the last video. I'm going to talk about the stock markets, which I have not looked at. I have no idea whether they had a good day or a bad day or anything. So we'll do that on the fly. And if we have time, we'll see what else we can cover. I don't know how long the video will be. Probably going to be a little bit longer. Before I jump into the content though, please do me that huge favor that you guys are really good about. Hit that thumbs up button. Make sure you subscribe to the channel if you have not already, and make sure to check the description for links to support the channel. I have my trading course link down there. I have my Patreon link, and I think I'm going to start adding a buy me a coffee link. I know there's some people that want to, maybe throw a tip once in a while, but don't want to be, don't want to sign up for a recurring billing. So I totally understand that. So I might start throwing that in there as well. So the first thing we'll talk about is the fact that this big move up to 11K that seems to have surprised some people and caught some bears off guard. Really not a surprise, guys. And it's always ironic when the market does these sorts of things, because here I am, the bear, probably one of the few remaining bears standing over the last year, or especially over the last 6 months. I'm still looking for lower lows. I'm still looking to take out those March lows in the big picture. But that doesn't mean that I'm always bearish on every single time frame. And I've talked about this in the past. You can be bearish on a macro time frame, and you can still long Bitcoin, and you can still make really good money trading with the smaller trends. So when this thing pulled back down, there was a lot of different reasons. That not all of them, I didn't list every single reason publicly. I shared some in Discord. I shared some on Patreon. But even publicly, I was putting out some, charts. Like this chart here on Twitter, this chart was from back on September the 4th. And at the time, we had just tested the 19-week moving average. And I had mentioned, hey, you want to watch this? This historically acts as support. And when I made this post, I was looking for a bounce up toward 11,000 and then more downside. And then, of course, here we are. 2 weeks later, what did we hit today? I think it was 10,940. I think that's what I saw on my phone earlier. 10,950, right at 11K, right? The market is not near as mysterious and near as shocking as what people like to pretend it is. It's not this big mystery that you cannot unravel. There are probabilities. Technical analysis does predict these moves. It's not 100%, nothing ever is. But if you leave out all the emotion and you stop listening to random talking heads who are making more money through their influencer accounts and through their advertising deals and all this kind of crap, and you start actually listening to people that are trading, very few real traders were talking about shorting Bitcoin after this pattern back here. Okay, so here's what I see on this. Let's go ahead and start on the weekly time frame, and we'll kind of go from there. So first off, our volume is getting weaker and weaker. So anytime you have a weak volume, that's a sign that the trend is probably coming to an end. Nothing is ever guaranteed, like I said earlier, but that is a bad sign for bulls. I do believe this trend is probably over. I think this was the top back here in August. I think this was the pullback. I think this is the dead cat bounce, and then I fully expect that we will go down from here. Okay, this first leg down, I'm not looking for anything catastrophic down to 2 or 3 grand or anything. What I'm looking for is just to start filling in some of the old gaps, right? So we'll talk about those when we get over to the daily chart. On the RSI, this found support beautifully on top of this box here. And it also had this nice inside bar here. So again, a couple different reasons that you might have been bullish short term on Bitcoin. They both look good, and of course you got the bounce. We're still underneath the long-term resistance on the weekly chart. That resistance goes back to December of 2017. That's another reason I still view this as one big bear market. And we're still underneath the resistance on momentum as well. So some levels to watch there. The 19-week moving average is currently sitting at $10,114. So if we lose that level, like I said, I think that will confirm that we are going to go ahead and head down. The first level I'm going to be watching We'll have to look at a daily chart to know for sure, but it's probably going to be down around 7,800 bucks. Okay. The 200 weekly, of course, is now sitting around 66.77. So historically, Bitcoin does not stay underneath this 200 week moving average. It throws tails down through it once in a while, every few years, but it does not stay underneath it. So I think a move down eventually on a bigger time frame, if we do fall below that, we have to be very, very careful, because we could see the first real bear market. And when I say real bear market, I mean on a macro picture where Bitcoin starts revisiting some really, really crazy levels, maybe even down around $800, right? Again, we're talking macro picture. We're not talking in the next week or the next 2 weeks. We're talking about a very big 6 month, maybe in 12-month picture. And a lot of that, I think, will depend on what the stock market does, which we're going to look at in this video. So that's kind of what I'm seeing on the weekly chart. On the 3-day chart, again, just really, really beautiful price action on this chart. Came down, basically tested this old line of support here from our old falling wedge, bounced right off of it just like you would expect it to, came up to the top of this box, and it did find resistance so far. So that looks fairly bearish in nature. Not sure that we're going to go much higher than this. I had really hoped to get around 11.2. We'll talk about why when we get to the daily chart, but we'll see. This candle so far looks pretty bad, but it's got almost 2 days left in it. So we'll see where this 3-day candle closes at, and then we'll reevaluate the situation. If we go over to a daily chart, this is where things get really interesting. I'm actually going to turn RSI off on this for just a second and just look at price action. So we have this old level of support up in this area. Of course, supports are never exact numbers. They're more like ranges. So up around that ballpark, 11.3, all the way down to this level around 11,068. I view this whole area as resistance. I also would like to see a retest of the 50-day moving average, which is currently sitting at 11,269. So that's something I'm going to be watching for. And I would really like to see a retest of the 61.8 Fibonacci level, which is right now is up around 11,217. Instead, what we did was we got perfectly rejected on the 50% retracement. So time will tell whether or not that was the move or not. If I draw this on a little bigger time frame here, it looks like that's around the 38.2. So it's a little, I think it's a little iffy to be jumping into shorts at this level, but I'd certainly be short before I would be long, right? If I was trying to catch a swing trade or a position trade for the next leg down. Ideally, if I'm going to take a position trade where I'm going to ride this whole, this whole trend down, what I'd like to see is, a retest up toward this 11.2 ballpark. And if we do draw some trend extensions on there, depending on how you look at this trend, I would personally draw it like this. If this was the move, and that's the, the high is in there, that's going to give us a target down around 82.76 for that trend. Makes sense. It's real close to the top of this range back here. If you draw this a little bit differently and you draw it from this high here down, then you're going to get a target down around 86.77. That target also makes sense to me, kind of the bottom, with support back through this area. But that's kind of what, the range, or the trend extensions are going to show. Me personally, anytime I see something like this, I want to slap my 200-day moving average on there. I can see that it's down around 91.44. So I do want to watch it and say, hey, does this hold support, or is this going to give way and, us move much lower and get back into this bear market type of movement? I'm going to show you guys something else here in just a second. But, I'm watching these liquidity gaps, this liquidity gap here. It exists right around 7,800 bucks. So like I said, that's the target that, I think we're going to get some type of move like this. And then we'll kind of have to see how that goes. And if you draw some big Fibonacci levels from March to the high back here, you'll see that 7,200-ish, 7,154 is going to be the golden pocket. So of course that range down here makes sense to me. Wouldn't shock me at all to go back down there. And of course, the next range after that, if it continues to cut through. When I say these ranges, guys, what I mean is, does this level hold or does it cut through? And as it cuts through each level, then I look at the next level below that. So for example, if it cuts through this, then I'm going to look at that golden pocket. If it cuts through that, then I'm going to look at this liquidity gap that's sitting down here around $5,400, $5,500. Okay. And yeah, I do think that will fill, right? It also happens to be right in line with this really long-term support that goes all the way back to 2018, which is what this red line is. And you can see that that support is where price stopped back in March as well. Okay, so several different levels to watch. Another level I'm going to put on here that I have never ever seen anyone else talk about is a 280-day moving average. Now, I typically don't share a lot of this stuff that I've discovered on my own. I typically share more common technical analysis type of stuff on the channel. I share a few tidbits that I kind of came up with on my own, but for the most part, I save that for my paid courses and things. The 280 moving day average, there is a reason that I use that. There is a reason that it's important, and I don't believe I've ever talked about it before. I've never seen anybody else talk about it. But essentially, guys, the reason a 200 moving average is important is because in stocks, 200 days is 40 weeks, okay? Why is that the number? I don't know why that's the number. I don't know why that's the number that, you know, people put so much emphasis on. What I do know is that it's 40 weeks. So if you take 40 weeks in crypto, which trades 7 days a week, 40 weeks times 7 is 280 days. So I'm going to show you something that, I don't know, maybe it'll come in handy for you in the future. If you had followed the 280-day moving average in crypto, probably would have given you some really good information on this market. So we'll slap that on there real quick. And you can see here that, you know, if you had longed it when it broke above it back here in April of 2019, it would have been a great move. If back in October of 2019, you'd have been long there, you'd have caught that Z pump, it would have been a great move. If you'd have shorted it when it came back through this, put in the bearish retest and was forming this head and shoulders, would have been a great move. If you'd have longed it when it came up through it and had a bullish retest, it'd have been a great move, so on and so forth. So yeah, I'm going to watch this level. It's currently sitting around 89.68, okay? So that's another moving average that I want to keep an eye on. As far as the daily RSI, it's a tricky bag because the thing is technically this closed just above this line, and that's really not what I want to see. I want to see like a really, really clean break through these resistance levels or rejection, and it really didn't get either, right? Yeah, it poked above it depending on how you draw the line, but the volume was really weak, and weak volume is not a sign of a breakout. So I'm pretty skeptical of the move. I'm a little bit nervous about the move in the sense that I'm a little worried that it's not going to go up high enough for me to get into my short positions. But, you know, that's trading. You're not going to catch every move. And I'm certainly not going to go FOMOing into a short just because I'm worried it won't get there. I'll wait. If it gets up to those levels I talked about, 11.1, 11.2, then I'll look at scaling into a short position. And it'll, you know, give me an obvious stop loss and obvious profit targets that way. So that's what I'm seeing on the daily, the 3-day, and the weekly. Now, let's go take a look at the stock market, which I have not looked at today. And let's see what we see. So we'll start with, let's do a weekly chart here. This is a weekly chart on the US 30, which of course is the Dow Jones Industrial Average. And this thing looks, not seeing anything that really jumps out at me here. No clean lines in RSI. Neither bearish nor bullish. There's really nothing there. If I look at price action, just looks like it came up and filled in that gap, which was right through there. So that's now filled in. You know, it's came right back underneath it. That looks bearish to me, but you also have to remember that it came back down and tested this old high, flipped it to support. So right now I view this as trading in a range, and I view this as being the two levels that I want to watch. Does it break north of the range, in which case it would make me lean bullish, or does it break south, in which case I would be looking for some type of corrective move down, okay? Take a look at the monthly chart. It is the same story. I did talk about this before the month closed last month. We are making the series of higher highs and the series of lower highs. That's very bearish. It's a nasty bearish divergence. And if this were to pump up, depending on how high it pumped up, it's very possible that it would just put in yet another divergence, which would just be another signal to potentially go short. Probably worth noting that October historically has been the month where a lot of stock market crashes have really taken place. So of course, October is just a couple of weeks away. So something to keep in mind. If we take a look at the US 500, which is the S&P 500, you can see here, this is a chart that I had drawn up maybe a week or maybe a few weeks ago. Same deal. We've got this long running series of lower highs. We have this long running series of higher highs. That's very, very bearish in nature. So I'm going to go ahead and take that off. And if we look at a weekly chart, let's look at a monthly first. It's important to note that so far it has not taken out this old high. So far we do have to consider this in a trading range, which is going to look something like that. So same deal. Does it break north of this range, in which case we might be able to assume that it's going to continue an uptrend, or does it break south, in which case we can start looking to play it as a bear, okay? On a weekly chart, still not really seeing anything there. Of course, if we put these on a daily chart, most of these markets are going to look the same. You'll end up with this beautiful line of support, something like this, probably more like this in reality, right? So I had this beautiful support back here, fell underneath it, came up almost like a bearish retest, and then the dump. So depending on how you draw that line, yeah, you know, something like that. Obviously, it's really lost those levels. If we go over to the US 100, which of course is the Nasdaq, so we had a bit of a range here. It broke out north of that, which was quite frankly a little unexpected. I didn't really see that coming, but then it immediately dumped thereafter. So I'm gonna take those lines off. We'll draw some support back here, and it looks like that. So this is kind of what I was waiting for. I think I talked about this a few weeks ago. I saw these breaking through these lines. I was looking for them to come up for a bearish retest and then more downside. So the Nasdaq is the only one that really did that. Got the W, has the retest, and now it's kind of a waiting game. Wait and see, does this break back above this, or does it get rejected and have that more downside? On price, let's put it on a monthly chart. So we're way above support back here. So this could come all the way back down, drop a couple thousand points and still be in an uptrend. So this one is looking way more oversold than overbought than the rest. And yeah, it doesn't look great. On the smaller time frame, on the weekly time frame, same deal though. It is technically still above that support there. So I just draw a couple ranges and see, does it break north of the range first, or does it lose the range and start heading back south? All in all, this is kind of playing out exactly like I expected. I expected the stock market to pause, get some type of dead cat bounce, and I expected that to allow crypto to bounce with it. And that is indeed exactly what has happened so far. So yes, I am very bearish, but no, I am not currently in a short position on Bitcoin. That may change 5 minutes after I conclude this video. I don't know. I trade setups. So for those of you that, most of you probably know this by now, but if you don't understand this, or if you're new to the channel, I do not trade based on what I think is going to happen. I only trade setups. When a setup comes in, I take that trade. What I think doesn't really matter, right? So I can be bearish right now. I can be super bearish, which I am, but right now I have not yet seen a short position entry. All I see is this bearishness. And if I don't know where to enter at, then I don't know where to get out at. I don't know where I'm wrong at. So that's what I'm waiting for. I'm waiting for some type of setup to form. Usually I find those over on the smaller time frames, like a 4-hour time frame is a pretty good place that I'm normally checking for some type of setup. Okay, and I have not seen it yet. But I am watching. I am watching closely. You can see this 200 moving average is up here just shy of that 61.8. So as a bear, I would love to see this thing move up to this level. I know that sounds funny. It's like, wait a minute, if you're a bear, don't you want it to go down? No, I want it to go up so that I can get into a proper short position. I do not want it to go down because I'm not short, right? Right now I'm neutral. So I need it to go up, put in a really nice setup, and then I can look for that short, all right? So the video is actually not as long as what I thought it would be. Maybe I just did a better job of staying concise and not rambling, I'm not sure, but covered everything that I really wanted to cover, so I hope you guys enjoyed that. As always, please remember I am just some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in the video is even trade advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment, cryptocurrency, the stock market, or precious metals. If you enjoyed this video, please do me a favor, hit that thumbs up button, make sure you subscribe to the channel, make sure you leave a comment, and if you have not already, check the description for different links where you can support me and my efforts. This is James with Crypto Common Sense reminding you to please trade safe.